If you're getting into property investment, or even if you've already got a few deals under your belt, you've probably heard of two terms being thrown out quite a lot. That is equity and cash flow. So which one should you focus on? Well, stick around to the end of this video and we'll break down both strategies, helping you decide which one fits you currently on your journey. Hey everyone, I'm AJ, a director of Handle Properties. We're an Australian-focused buyers agency where we help everyday Aussie families fast-track their wealth through smart, data-led property investments. So what is equity? Let's first start with equity. In simple terms, equity is the difference between the current value of your property and the loans that you have outstanding against it. Let's say you bought a home 3 years ago for $500,000 with a 20% deposit. At the time you purchased this house, your equity is $100,000, which is your $500,000 property minus your $400,000 loan. Now imagine 3 years have passed. Your property value's increased. It's gone up from $500,000 to $600,000, but you've stayed on an interest-only loan, so your loan balance has not changed. Now we've got $600,000 minus your loan of $400,000, leaving you with an equity of $200,000, which means you've effectively doubled the equity you have in this property. But before we can say whether this is good or not, let's now jump over to what is rental yield. Well, in simple terms, rental yield is your annualized rent. So take the rent you earn per week, multiply it by the weeks in the year, 52, divided by the property value. So using the same example as before, if you purchased that $500,000 property and it earned an annual rent of $25,000, that's a gross rental yield of 5%. But here's the catch. In residential property, everyone talks about rental yield at a gross level, but there are many holding costs associated with holding an investment. You need to factor in things such as property management, which costs, as well as council rates, insurance. You might have water rates, ongoing maintenance. Say the dishwasher breaks every year, you're going to have to go get that fixed. And of course, interest repayments on your actual loan, which is going to be one of the biggest costs that you have. With interest rates currently sitting around 6%, that's a huge amount. So many of our clients are either break even or losing a little bit of money when they first purchase their property. And that's what we call holding costs of an investment, especially in today's high rate interest rate environment. So which one builds wealth faster? Let's compare. Over the 3-year period, if rents continue to rise, assume you can make anywhere between $10,000 to $20,000 in rent, if that. But in the same period, your property value has gone up by more than $100,000. So from a wealth creation perspective, it's pretty simple. Equity growth almost always outperforms rental returns. And especially when you're in the early stages of your investment journey, this is something that you want to keep in mind. That's why so many seasoned investors always focus on capital growth first, because it accelerates how quickly they're able to scale their portfolio, using the equity from property 1 to purchase 2, 3, 4, and many more, rinsing and repeating that cycle to build a big asset base. So which one should you focus on? Here's the honest answer. It really depends on what stage you are in your investment journey. If you're early on trying to build wealth, equity is the fastest vehicle. It allows you to grow your portfolio, access more capital, and leverage into new assets. But later on, once you've built a big base, your goals actually start to shift. Maybe you're planning on cutting back on work, perhaps moving into retirement. And that's when you really want properties that pay you. That's when rental yield becomes more important, and you might look to sell a few of your assets to pay down the debt so you can sit on properties with higher rental yield, so you're actually receiving money in your back pocket, allowing you to step down from work or other commitments. So it's actually not about choosing one strategy forever. It's about knowing which one matters most to you right now. And now, if you're unsure about what stage you're in, or wondering how to strike the balance between equity growth or cash flow, well, that's exactly what we help our clients do at Handle Properties. Book in a 15-minute session. We'll review your current situation, help you understand where you're at, and map out the smartest next steps for you based on your goals. Click the link below, and let's make your money work harder for both you and your family.